Welcome into the crypto bunker. I want to talk to you guys about gold, silver, and platinum and why you might want to own them. None of this is financial advice, and let's get into it. So this is how you go about buying physical. You can get it from multiple sources, but I believe JM Bullion is the best, cheapest, and most reliable. I've never had an order that hasn't come through. So you can go to just in stock gold and just look through some of the stuff. But we can just scroll through some of these while I talk about why gold is a good idea to have in your possession. So gold and the Federal Reserve. The Federal Reserve, the United States has $8,000 of gold, 8,000 ounces, or sorry, 8,000 tons of gold, which is a lot. And pretty much every central bank holds gold, and they've been stacking gold. Let me actually look this up. Central bank gold balances. But yeah, they've been stacking gold for the past 10 years. Let's see if this is anything. You can see, so people think gold's a relic. Well, why are all the central banks stacking it then, right? It doesn't really make sense. So the big five central bank combined have been stacking gold. And so, as you can see, so with gold, we can take a look at it, and we can take a look at some of these gold ounces, these pieces. You don't need to buy a full ounce. You can buy a gram. You can buy I like the Valcambi bars. They have all types of different sizes for that. So you don't actually have to go and buy a full ounce or anything, but there is some cool ones in here for sure. I suggest trying to buy the cheapest that you can, but it's also nice to have an American coin because that's considered legal tender. So they can't actually confiscate that from you if they ever did confiscate gold, which they have in the past. You would want to have one of these two here. I don't think that's likely. So, but you might want to have that just in case. And they also sell those in quarter ounces, half ounces, tenth of an ounce. So a lot of different options, but gold in the Federal Reserve. So gold represents a lot of these Federal Reserve's assets. And so if their paper currencies go down and they want to bring them back, or they say they go up, which they don't want because that ruins everyone's time in a deflationary environment, which is potentially possible for assets. I don't think it's possible for, I don't think necessarily food or things like that, but if the US, Eurozone, and China were to create a gold standard backing based on the M1 money supply, gold would have to be $10,000 an ounce. If we backed up the M1 money supply 100% with gold, the price would have to be $50,000 an ounce. So you have to realize that if the only real physical, tangible asset that the Federal Reserve and the central banks of the world own is gold, then that's where they can manipulate the price of gold. And just like they did back in the Great Depression, where they manipulated the price, they raised the price of gold and they said, we'll buy your gold at this raised level price, turn in your gold and we'll give you, $30 or $20 an ounce. And then I think they raised it to 35 after they collected everyone's gold. It's kind of a scheme. But anyway, yeah, so it's basically possible that the central banks can use that gold to do something. They could have a digitally backed currency that is backed with gold. They could, do a numerous amount of things with that asset, but they don't hold any Bitcoin. They don't hold any Ethereum. They don't hold any silver. Well, some of them hold silver and some of them hold some platinum, but we can get into that. as well. But, the other thing is gold is money. Gold has been money for 5,000 years. And I think people, kind of underestimate that, I guess. They think gold's a relic. Gold doesn't make sense in today's digital world. But I would argue that it's actually makes more sense than ever, because in this ever increasing digital world, we need a hedge against all of this digital money that we have on the screen. So, if we have all of our money on a screen that just tells us you have this much money and this is your net worth, at the end of the day, like, that might not be real. If you think about it, what is real? What can I put my hand out and touch and have in my hand and tangibly look at and say, this is wealth. This has no counterparty risk. And that's the thing, is all these other things have counterparty risk. Cyber attacks, power outages, grid down, world wars, the Fed being insolvent, banks being insolvent, and things like that. So gold has been money for that long. And, it's also in the Bible, that gold, there's many verses in the Bible. One of them is, but all silver and gold and every vessel of bronze and iron are holy to the Lord. They shall go into the treasury of the Lord. There's multiple mentions of the word good. With gold, he says, and the gold of that land is good. And the gold of that land is good. And so, the crucible is for silver and the furnace is for gold, and the Lord tests hearts. So just some interesting things if you wanted to look up like gold in the Bible. It's pretty cool. So in my opinion, gold is money. Nothing else is money. People say Bitcoin is money or ETH is money. ETH, I think, is more money than Bitcoin because it's actually used for things like buying art, buying digital art. It's used for DeFi, decentralized finance. You need it to do transactions. Bitcoin is just, I don't really know what it is anymore, to be honest. So, it is what it is, I guess. Gold is also insurance. So gold is insurance against a cyber attack, against a financial collapse where people are running for real assets when things start to break down, which I think is possible at this point. And so, if we just think about gold as that real asset that people run to in times of trouble, I think that could be something that is going to happen. And the thing also is that there's actually derivatives of gold and silver, which are said to be possibly 100 to 1. And so what that means is that there's 100 paper ounces of gold for every 1 ounce of physical gold. And so if you buy GLD or you buy, SLV in terms of silver, these ETFs that are supposedly holding your silver, where if you own enough, you can take physical delivery. They don't have all the gold. They're not prepared for a run on physical gold. And so if that ever happened, where there was a run on physical gold, the price would have to readjust for there to be enough physical gold. And over the past however many years, the accumulation of gold by big players and central banks has been so massive that there are some shortages that are occurring in the markets. Right now, it's a perfect time to buy physical, in my opinion. The price could easily go lower. right? But that doesn't mean that the physical price would go lower, because in a sell-off scenario that the bank, everything goes to zero, like hypothetically, there will be a run on physical gold that will actually increase the premiums. So if gold went to 1650, which I think is the 200-day moving average. Let's see if we can get that up here. Yeah, so if it went to the 200-day moving average, or maybe it's the 200-week that I was looking at before. Let's see. Yeah. Okay, so yeah, so if it went to the 200-week, like 1580, I believe the physical price would probably be right around where we're at now, honestly. And maybe, I mean, maybe not. Maybe it would be a little cheaper, but you might not be able to get what you want. You might not be able to get the American Eagles, or you might not be able to get the Gold Buffaloes, or, maybe you were eyeing up something that you wanted and now it's not there. That's the type of thing you'll see in a sell-off scenario. So I would say if you want to buy, like if you want to invest into gold as a physical asset that you hold in your hand, there's no better time than before a potential crash. Because I was someone that was buying after the crash in March 2020 when silver was at $12 an ounce. And when silver went to $12 an ounce, you could not find any physical silver. I called the local guy and he sold me silver for $22 an ounce, which is a $10 premium. So if silver went to $18, which I believe is sort of where we would catch some support, we can see on the 200-week on that as well. But you would probably still have the same price silver, if not even more. Like it's like 27 right now. It might be 28 in that sell-off scenario. So that's something to think about. It's I would say it's insurance on basically probably everything in your life, because most of our lives are digital. So I would argue that people say like, oh, gold's a relic. I would argue if you have assets in crypto, you should definitely have assets in physical gold and silver as a hedge against those, because if those turn out to be a scam, or they dump, or whatever happens, people will rush to gold and silver because that's the only other option. Like everyone's using Bitcoin as the gold option right now, and gold and silver option. So if Bitcoin turns out to fail in its mission to be like, the best store of value, ever or whatever, then that people end up, they're going to have to get gold and silver as a replacement for that if they don't want to own dollars. So that's kind of what I'm thinking with that. A lot of people will say if you touch the bottom of a range enough times, you actually fall through it. So there is a possibility here, in my opinion, that we touch this kind of too many times, and now we might have to go down to this 1580 range, honestly. In a sell-off scenario, paper gold will go to that level. That does not mean that physical gold will go to that level. It will not. So that's why I think it's good to have cash to buy the dip on, maybe a gold miner that you like. Gold miners are interesting because they own gold in the ground. So they physically own gold in the ground, which means if you own one of their shares and they're not going to print any more shares, and you can guarantee that, then you own a piece of that gold that's in the ground. So that's another way to get exposure. They also pay dividends, and maybe in the future, who knows, if the dollar goes to shit or whatever happens, right? Like maybe those assets that are physical assets that they have in the ground, maybe they pay them out as dividends. Maybe you get an ounce of gold a year if you have $10,000 in a mining company or something, right? This is just an idea, but these are the things you have to think about in this economy. Kind of like where we're headed, in my opinion, is a different type of economy where you need to be dynamic, you need to be diversified, you need to have cash, you need to have physical items on your person that you can hold and touch and say like, this is mine. And you also need to have exposure to the tech innovation boom that could possibly happen. So I think it's a time where you want to sort of be split. None of this is financial advice, but evenly across like a third cash, a third gold and silver, and a third like Ethereum or whatever crypto you might, Ethereum or Bitcoin. I think everything else is in question at this point. So let's take a look at silver. Silver is my favorite asset, possibly besides ETH. ETH and silver for me are my two favorites. I just can't get enough. And silver, there's many use cases for silver. So let's see where that 200, yeah, so it's right where I was saying, like 19 is the 200 week. Here we did drop below the 19. But I mean, if we look at it, let's see if we can do some type of trend line here. I'm not sure if this will work, but I mean, 15 worst case, that's my opinion. 1561 worst case. But in that, I'm telling you, if it went that low, there, like, it just doesn't make sense, because we are having inflation, and like I said, that there's many more paper derivatives, and what that means is that they manipulate the price. They do not want gold and silver to succeed, but it will eventually succeed because there will be shortages of it. And you obviously need silver to use solar technologies, which they talk about with this ESG movement. So if you want to hedge against energy prices that it will go higher with all this use of technology, which I completely disagree with, we should call our senators and representatives and tell them not to support ESG, because that's what they're going to use as a banking. They're going to use that to not let us have a bank or not let us do certain transactions like buy meat or buy, use natural gas as our heating process or whatever it might be in the future. I just think that they're going to use that against us in terms of those things. So anyway, there's use in solar technology. Every solar panel has 0.62 ounces of silver. Amazon and Google both have said they want to go full solar for their entire network. That would cause a massive run on silver, in my opinion. Just the fact that people don't know this yet, like the only reason that they can keep it down is, like I said, because they have 100 to 1 or even more with silver than gold paper derivatives. It's the most manipulated asset of all time, even more than gold. And right now, I think it should be worth $200. And that will bring me to this, which is the US debt is $30 trillion. Each citizen, if we took that 30 trillion, owes $90,000. And per taxpayer, 240,000. Craziness. That's us. 200. So we were in debt $240,000 each by being a citizen. So paper to silver ratio. Dollar to silver ratio, $3,000 an ounce. That's the proper price of silver, and gold, 21,935. Sounds crazy, but if you look back in 1913, dollar to silver was $2.66. And so that was the correct price of silver at that time. And that was totally reasonable. Like, everyone knew that the price of gold was like $20 an ounce, and back then it was exactly where it was, $28. So now it's so manipulated and so far off from this. This was like true value of it, right? True value back then. Like that's what it actually was priced at. And now you can see what the value should be. And I think crypto has taken a lot of that away. I think a lot of people have run to crypto, but look at the dollar to crypto ratio, only 11 to 1. I think that's because there's so many cryptos. Look at the ratio then, 9,893 in 2013. Look at all the cryptos that have been created. They're created out of nothing. Half of them are probably scams. So I think like once that sort of gets cleaned up, money will flow back to gold and silver as well. So we'll see that play out. But silver is used in electronics, so it powers all of the blockchain stuff. It powers computers, phones, TVs, engines, you know, all these like new EV cars that they're making have to have silver. Silver is the best conductor of electricity. It's a water purifier. It's an immune support. I've used Silver Biotics as an immune support for, you know, when I'm feeling sick or something, I'll use that and I feel like it works well. Silverware, jewelry, you know, they're used in nuclear reactors. So if we want to go towards uranium, we're going to need a lot of silver as well. So yeah, so honestly, I wouldn't be surprised if we go down, but at the same time, I'm telling you, like, physical metal will be the same price for silver. Platinum is also an interesting one. Let's look at metal reserves worldwide as of 2020. We have platinum at 60. Most of it is in South Africa. Some of it is in Russia. And the thing about that is that there's a lot of mining strikes happening right now in South Africa. So with those strikes, we're going to see shortages of platinum coming out of South Africa. And then Russia, with the possibility of war, I think is going to probably hold off from releasing any platinum. I'm not even sure if they do already anyway. So most of it comes from one place. And so if we sort of have this like blow up of the system, of the supply chain of the system, and there's a run on physical metal, God forbid, there will not be any platinum. I mean, platinum is in terms of, in comparison to gold, it's 30-1 in terms of rarity. It's the rarest metal, I think, on the planet. Maybe palladium as well. But platinum, I think right now, usually it's not even below gold's price as well. So that's another thing. I know people say that's like not a thing or whatever, but most of its existence, the price has been higher than gold. And right now it's like 1,000 and gold's like 1,800. So, you know, I just think that that's like a good, and the thing is you can buy like 10 grams at a time too, of platinum. So you can buy 1 gram, 5 grams, you know, 10 grams. You can buy this on sale 1 ounce for that much. I mean, it just seems to me that if there was a run on physical metal and the financial system collapsed, platinum would be the most unattainable of all the metals. So again, that's just my opinion on that, and on, you know, on platinum. And it's a war metal as well. It's a strategic reserve for war. So, you know, think about that as well. So, so yeah, I would say that's pretty much all I have. And hopefully you guys got something out of the video. If you haven't subscribed, please do so. Like the video, share the video, and see you next time. Peace.